So far, our analysis of Tesla for the past couple of weeks has been playing out to perfection. We are talking about this breakout that you could see here once price was over the market bias, and we're talking about how we are expanding. From this point now, we've been bearish short term on Tesla for the past couple of days, and we're still expecting a potential move to lows of about $230 before earnings are announced. In this video, I'm going to share with you why and what I'm currently doing with my December calls. To get all of the indicators that we'll be using in this video, you can go to our free courses down below and you can click on the market bias course. This will show you all of the settings that we're currently using and the exact indicators on TradingView. When price breaks over the market bias, which you could see here is this green tape-like indicator, it means that we are in a bullish trend. However, what we really want to see is what's called an expansion, and that is when the market bias turns bright green, and that means that there's volume behind the trend and that we should continue to break out. The market will always move in two ways. The first way is called consolidation. This is when price bounces between two levels and we continue to compress. From there, we move into what's called an expansion phase or an impulse phase. In this case with Tesla, we saw highs all the way up to about $267. The trend overall is still bullish, but you will notice that there is money coming out of this push, which means that the chances of it pulling back before bouncing are very high. If you take a look at the BX trender, which is this oscillator at the bottom, you're going to notice that since we peaked back on July 10th, we have been making lower highs and now lower lows. Once again, this does not mean that the trend is now bearish. It just means that there is a very high chance that price will pull back to retest this support zone before breaking out. Yesterday on X, I actually called out a position on Tesla. I grabbed 726 $250 puts and I lost $4,315 and I actually got shaken out of that trade. At the time of taking that trade, we had broken above this market bias, but we knew by looking at the daily chart that there wasn't significant money coming into the stock on the BX trender. And that was making me believe that we were going to see a potential rejection at this point and sell back off into $248 or equal lows from back on Tuesday the 16th. Planned stop loss was right around $257. And before the session closed yesterday, I had decided that I was going to get rid of my puts, and that was when I took my loss. We wake up this morning and you can see that we initially got bought back up, but price could not push over this golden Fibonacci level. The market moves in a very structured manner, whether it's to the upside or to the downside. In a downtrend, price will sell off, take a bounce, and usually pull back up to about 60 or 70% of the initial sell-off before potentially rejecting to meet what's called equal lows, basically the low we made before, or best case, lower lows. Same exact thing happens to the bull side. When we have a massive breakout, price will normally pull back 50, 60, 70% of that leg, and then we will move into equal highs or higher highs. And I knew that because there wasn't a ton of money coming in on the longer term setup, that this sell-off would most likely push back up to here and then continue our move, which is exactly what ended up happening today. I would have been able to take a profit today for a massive return, but we did the smart thing yesterday by closing it because I didn't want to hold weekly options of that size overnight. Even though it wasn't the decision that made me the most money today, it was definitely the smarter decision if we were to play that out over the long run, because my hope was that that sell-off was going to happen in yesterday's session, and it didn't. Switching back to the daily, price will usually break out, pull back into a support level. In this case, I think 220 or 210 will be the absolute lowest that we could see before breaking back out to test 270, 300, and 320. I am currently in calls for December, $260 strike price. I'm only in with about 25% of the position that I want because my thought is that we're going to at least sell back off to 240 or $230. And it's at that level that I would like to accumulate more of my December calls and play the breakout to the upside once again, most likely after earnings. Now, what would invalidate my thesis here? What would have to happen in order for me to say, you know what, I don't think that's going to happen. Tesla's just going to continue to break out. The first thing is that we have to see bullish accumulation. We have to see this BX trender flip from lower lows to higher lows like we saw back here. This will show that there's actually enough money coming in to push the stock through this resistance level and bid it up before earnings. You have to think about it. If you're a hedge fund in the short term who has been accumulating Tesla anywhere between 190, 160, and 150, and then Tesla runs about 60% in a couple of days, are you really going to continue to bid this up? Don't even think that this is necessarily a retail trap. I'm not saying big money's getting out of their positions. I'm just saying that in order for a stock to continue to move higher, someone needs to bid it up. Someone needs to continue to step in to buy and to overpay for it. And so, if you're big money, the people who can actually move the market, are you going to continue to buy here, or are you going to hold off a little bit until earnings, which is the big catalyst coming up, and then from there, decide what you're going to do? So, I believe in the short term, over the next week, week and a half before earnings, I think that we'll probably see Tesla pull back to test 240 and most likely $230, which is where I will plan to add more to my position. If you want to get access to all of our free courses, the link is in the description. We actually just released a brand new one going over our 15-minute open range break strategy and how to read unusual options activity. The link will be in the description. And if you want to learn my two-step swing trading system that requires only 30 minutes a day at market close and 1 hour on the weekend when we build our watch list, go ahead and check out our private academy. The link is in the description. We focus heavily on the system that you guys see here each and every single day, going over the BX trender, the market bias, how I manage risk, how I set up my positions, and most importantly, all of the proprietary settings to it. The link to the private academy will be in the description, and I hope to see you guys over there. Thanks for all the support.